if you really want to capture value, you have to try to be as counter-cyclical as possible. Because sometimes, talking about investor pressures, when silver or gold is going up, everybody wants you to buy a mine and build a mine. And that's precisely the wrong moment to do it.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today, a conversation I've been excited to share. This was recorded 2 weeks ago back at the Silver Symposium, but had a chance to sit down with Jorge Ganoza of Fortuna Silver and find out more about what it's like just running a silver company with some of the challenges that come up, especially when the price of silver goes up and goes down. Yet, what that's like internally, how you handle the different challenges that are associated with that. Does talk a bit about some of the Fortuna projects, but more a conversation of just balancing the various factors that go into running a company, managing as many people are involved. So thought that would be helpful and interesting to people out there. And with that said, let's get started with our conversation with Jorge. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and I am live at the Silver Symposium and fortunate to be joined by Jorge Ganoza of Fortuna Silver. We've had many calls with Jorge before, but nice to finally do this in person. And it's great to meet you earlier this summer, and nice to see you back here. And so, how's everything going so far at the symposium for you?
No, yeah. First, thank you for the opportunity again to join you and speak to your audience. And the Silver Symposium is a gathering of silver investors that we have supported for many years. Uh, and we're happy to be back. Yeah, absolutely.
Well, to start off with, anything in particular from any of the presentations you've seen? We're sitting here recording on Wednesday or Tuesday, August 30th, I believe, and silver around $19. Some people not happy with the price, although interesting when we look back over the past decade, silver is hovering around $15. So I guess a matter of perspective, but relating to where we are now, curious just any thoughts on where silver stands, accepting it as it is today?
To answer that, I have to say that we bought our first silver mine in Peru back in 2005. And silver, I think, was trading, when we started looking for the asset, silver was trading at around $4 per ounce. So putting that into perspective, we always want higher silver prices, but $18, $19 is you have to be able to make money at those prices, right? So, you know, it's an environment that's very putting all investors to the test. As a producer, and I always joke with this because I've been in mining for 4 generations. So I say I have been long precious metals 4 generations. So, investors can time when they come in and when they sell. We as producers cannot. We're long all day, right? And like I say, I've been long 4 generations now. But certainly investors are being put to the test. Investors in mining equities and silver and gold. And but I think we all share one similar view with respect to where things should be. And we have to stick to our guns and be resilient, and that's what I find in the conference, no? Yeah.
And what's that like? I mean, you're already running a company, you're responsible for 5,000 people, which is a challenge in and of itself, in addition to the strategy and figuring out what you're doing as a company. How do you handle that sometimes when investors, especially newer investors or retail investors or people who have a lot of emotion about it? I'm curious what that is like, just as another component of what you have to do as the CEO.
Yes, and if one of the most challenging things in a CEO role, I believe, is balancing the short-term pressures and sometimes concerns and even impetus of the investors with the long-term decisions you believe you have to make, right? and balancing those two. It's not one or the other. It's knowing when to compromise and always be open to listen to your shareholders and stakeholders in general, right? I rely on a great team of executives and staff in Fortuna. As you said, we're 5,000. This is not something that I do alone or I carry on my shoulders by myself. So Fortuna is really a team effort. I'm fortunate to have put together, and we were just talking about this, right? The team of people that have supported the growth of a company over 18 years, right? And I'm very proud of all the professionals that have made this possible through the years and the ones that join me today. And balancing investors' expectations, and sometimes investors want the dividend now, or are asking why are we growing, or are asking why is the share price down, and I are questioning why we went to West Africa, or what happened with the permit in Mexico, or what's going on with the politics in Peru or the economics in Argentina. Imagine all the things, all the concerns, and we respect them all. And always try to keep long-term value in the forefront when we make decisions, no, and try to be as transparent with our thinking with the investors as we can be, right?
Yeah, and I'll imagine that helped a lot growing up in a mining family where you were seeing a lot of these things from an early age, and perhaps you could talk a little bit more about that background and what led to starting Fortuna Silver.
Yeah, I've seen the ups and downs of the mining industry since a very early age. No, my great grandfather was in the mining business. My grandfather was a successful mining entrepreneur. My father as well, who's still working in the mining industry. And we are four brothers, and 3 out of 4 are in the mining industry. And I'm blessed because I have 4 daughters, and I think 2 might be inclined to study geology. So I've seen the ups and downs, and I think I've been long 4 generations now. And it's a boom and bust industry. It's cyclical. So we try to focus on assets. If you ask me what I have learned through the years in mining, is you don't play the bull runs or your expectation. Here you have to work to put together a balanced portfolio of assets that can perform throughout the precious metal cycle. No? And in fact, this is a business where if you really want to capture value, you have to try to be as counter-cyclical as possible. Because sometimes, talking about investor pressures, when silver or gold is going up, everybody wants you to buy a mine and build a mine. And that's precisely the wrong moment to do it.
Usually too late by that point.
Yeah, it's a moment where you should be harvesting. You have to do that when prices are down and assets are discounted, or it's cheaper to build, right? So, but investors don't necessarily coincide with that, right? When prices are down, everybody becomes risk averse, and when prices are up, everybody is overhyped. But again, we try to work with a view that assets and the mining company has to perform throughout the precious metals price cycle, in high prices and reasonably low prices as well.
Yeah, it is interesting how, as humans, especially in the retail side, we're often wired a little bit for a buy high, sell low mentality, which is a little bit of the opposite of perhaps what you'd want to go after. Yet, to help mitigate that, I know that some of the other times we've talked in some of your recent interviews, you've been going for projects that have helped to extend the mine life a little bit, which obviously, if you have a shorter mine life and every couple of years you have to replace that, is its own challenge. But perhaps you could talk about that and how that stands.
That's been a strategic view. In our early days, we were more focused and oriented towards assets that we could bring cheaply into production. no, and fast and effectively, so we focused on high margin assets, vein type deposits where you can develop an underground mine that then with internal cash flow generation you can scale up. And if you look at what we did at the Cayoma mine, our first asset, and what we did at the San Jose mine, our second asset, were very successful. It was very successful execution of that very same strategy. Cayoma started as a 600 ton per day mine, and it's operating at 1,500 today. And the San Jose mine in Mexico began as a 800 ton per day mine, and today is a 3,200 ton per day mill and mine operation. But usually those type of assets come with short reserves. I mean, they can operate for 500 years as the Cayoma mine does, but Cayoma has seldomly had or showed 3 years of reserves ahead of it and operated for 500. No? Today we have taken Cayoma to almost 10 years in reserves, but it's the first time in 18 years that we've been able to push reserves in that mine that far. So a few years ago, we decided we need to start balancing our portfolio with different type of assets that where you can show 10, 15 years of reserves. So that led us to the acquisition of the Lindero mine in Argentina, and that also led us to the acquisition of Roxgold in West Africa. Séguéla, which we're building right now, once in operation, will be a mine with 10 plus years in reserves at low cost of operations. So we're giving predictability to the investor with, those type of assets. Because, Cayoma might operate for another 500 years, but will always be a leap of faith. And San Jose is running short of reserves, and everybody asks me, well, but are you going to be able to extend the life of mine? And I joke and I say, like you guys say in the financial industry, past performance is no measure of future success. When we brought San Jose into production in 2011, it had a 5-year life of mine. And the mine was a third of the size it is today. 10 years later, 12 years later, the mine is 3 times bigger and still has 4 years in the reserve life. But and investors ask me, are you going to be able to extend that? And I'm like, it's always a leap of faith, right? And you say, well, we are drilling like very aggressively, and hopefully we can make a discovery. But it's a different story when you have assets with 10, 15 years life of research. And that's what we've been doing.
Yeah, and along those lines, something that you mentioned before that will move towards that is that at Séguéla, it's not just one mine, but you have a setup where there's the potential for several mines that could be feeding the same area. And I thought it was also interesting when you mentioned last time we talked, someone had asked about, are you guys considering buying any distressed cheap assets that are lower in price with the silver price down yet? Those are essentially it. And perhaps you can talk about that a little bit.
Yeah. Again, our main driver to go to West Africa and make the Roxgold acquisition was just the value, the deep value that we see at Séguéla. So it's not exciting enough that we're about to deliver that mine in production mid next year, but the exploration potential. And we currently have 5 deposits: Antena, Ancien, Agouti, Pula, and the newly discovered Sunbird. But Sunbird is not in the reserve yet. It's not in our life of mine plans. And there we have about 350,000 ounces of gold at 3.6 grams for an open pit. So very high grade, and that's incremental to what currently we show in our published life of mines and reserves. But we have a 30-kilometer stretch of the structural corridor that hosts these deposits. So what we envision is a centralized mill feeding from all of these nearby deposits. And we control 30 kilometers on that belt. And within those 30 kilometers, we have already identified approximately 40 gold occurrences. Now, not all of those are going to materialize into a deposit, but I think we have a fair chance to add. And I think, Roxgold was able to purchase Seguela 2.5 years ago because I believe the previous owners were fixed on building one large deposit and they were struggling to do that. And our approach is, this is not a deposit where you will have one massive ore body. You will have multiple 300, perhaps 1 million ounce deposits. Today, our biggest is 400,000 ounces. But Sunbird, the new one, is already, my estimation, 400,000 ounces plus and remains open. So, I have to be careful with what I say there, but we currently have 350,000 ounces at Sunbird, but it's wide open and we already drilled it beyond the 350,000 ounces. So I'm starting to see something aching to 400,000 plus. So I think we have the opportunity to build multiple deposits, feeding that centralized mill and having hopefully those millions of ounces over time, right?
Yeah, and it's interesting, along with a lot of the stories I hear about mining, where sometimes people are seeing things one way, yet when you take a step back, maybe a new perspective, and maybe it isn't what we initially thought, but when you observe something for what it is,
Yeah,
I think can go a long way. And
that's
perhaps,
that's the beauty of geology, though.
yeah, and I guess you have so many great geological minds in the industry that you can see things different ways, and then it comes down to you making a decision. And perhaps the last question to run by you today, in the decades that you've been doing this, what has changed the most? Is there something that you've learned in particular that you wish you could go back to the younger Jorge and tell him, or even in the time that you've been running Fortuna or before, that really stands out, that has been significant on your journey, that might be helpful for others out there?
I think, I'm a geological. I have 2 degrees basically. No, I'm a mining engineer. I'm short of one course for the mining engineering degree, and then but I graduated as a geological engineer, right? And geology and exploration are a passion of mine. So going back to your previous question about these minds that come and look at things different way, I have made so many mistakes and along the way, but I learned from all of them. And I have an anecdote. Uh, we were building the Cayoma mine back in 2006. And I'm not going to say names, but a company comes to me saying, hey, listen, we drilled this prospect in Peru and we haven't found anything. And we still believe it has potential, but it's not for a company of our size. It was a producer, a large producer. But perhaps you guys want an option. I like to go myself to look at everything we buy. I like to go and put my boots on the ground before I buy anything. Personally, I go with my geologists and everything. But on that particular occasion, I was tangled with the construction of the Cayoma mine, and so I had a Peruvian geo and a PhD, a North American geo, a PhD, who I respect a lot. And so I said to the 2 guys, why don't you guys go together and look at this project for me and tell me what you think? So, they hopped in the car, they drove for, 10 hours, went to look at the project, came back. And you know what? The local geo, who was a young geologist, we should buy this one. Is the best thing, we should buy. And then the PhD was telling me, Jorge, it's a dog. Listen, who did I listen to? Of course, instead of listening to the young geo, I listened to the PhD. And I passed on the opportunity. That mine today is in production and yields about 250,000 ounces of gold every year. So, we have to make decisions all the time. And you want to keep your mistakes small and learn from them, live and learn. And so, that's the beauty of this industry, right? So you learn, and you learn a lot every day, and you know that's what I shared with you, something that happened to me, to us. But the industry is full of those stories, right? And that's what keep us in our tiptoes and makes this fun at the end of the day.
Do you think if you had gone to visit the project yourself, what would you have decided?
Of course, I have to say that I would have taken it. No, but I don't know. I don't know. But I think this speaks to the I'm not going to say difficulty, but the challenges of discovering and getting your hands around good deposits. No, I mean the two geos in the story are the two are people I respect very much, very knowledgeable, and the PhD guy is a very accomplished geo with a lot of discoveries under his belt as well, right? But I just the young one was, you should grab this one, and the PhD was, Jorge, it's a dog, don't bother.
Well, it's interesting in that sometimes it's nice to have that youth, and sometimes they have a different perspective, and it's good to see that. Go ahead.
No. So what I learned, you learn every day here.
Yeah.
Keep humble and surround yourself with the best people, guys who know more than you.
I think that's a good takeaway, where at the end of the day, you're managing people. There is the rocks and the geology, but I think what makes it a success is the team. And
geology is not math, right? 2 + 2 doesn't make it 4. It's a lot. We're always challenged with making decisions with little information, right? So, yeah.
well, I think you're doing a darn good job of it, and appreciate you stopping by. I know you just did your presentation, but it's a pleasure to see you as always. And thanks again for joining me. And again, folks can find out more about Fortuna Silver at fortunasilver.com. And Jorge Ganoza, CEO of Fortuna Silver, thanks again, and have a safe trip home.
Thank you.